Welcome back to another episode of Projecting Grandeur. I am your host, Ron Dichter. Thanks for tuning in. Thanks for being part of our community. Today, I am joined by somebody who I've had the privilege of knowing for more than 2 decades. Adam Bloomston is a serial entrepreneur. He's helped build one of the most recognized payment companies in the country, Payscape, now known as Payroc. I mean, he really is a global fintech powerhouse. He, year after year, had this fast-paced growth that I'm excited to talk about. And now he's dipping his toe into a little different beast in fish tips that I want to talk about as well. So, Adam, thank you so much for joining the show. It's great to have you today.
Hey, Ron. Thanks for having me. I appreciate it.
Now, I have known you a while, and I've seen the Payscape, now Payroc days from its really early days. But just for our viewers, you started Payscape in 2004 with $500 and one big old vision. What was your original mission, and what does the company look like today as it's compared to that vision?
Yeah, that's about right. There was four of us that started Payscape in '04, and we all put in $500 a piece. So technically, it was $2,000 in the bank account on day one. I actually have the original bank statement. I found it like 15 years later, and we had it framed. I've got it somewhere up in my attic now, but I got to pull it back out. Um, and we got into the business. We were all in different businesses, and I'd say everybody kind of knew how to sell. Was the original crew, and and were looking for residual income. I think was probably the thing that struck us the most. We were in different businesses were only as good as your last month, and then on day one of the January 1st, February 1st, whatever you got to start back from scratch. And my one of my partners at the time had come to me and said, what do we know about payments? And one of our businesses had a credit card machine. We did the homework, we researched, we kind of dug in, and we realized had we sold ourselves that piece of equipment, we would be making $50 a month off the credit card processing. And it just like a lightning bolt, we were just like, whoa, we could sell a lot of these. We know a lot of people there. We don't know anyone that's doing this in our town. And that kind of started. We just started out of a basement, started pounding the pavement. I owned a couple other businesses at the time, small, totally unrelated industries, worked on selling those, getting those off the plate and just focusing on selling credit cards door to door. So, as far as like a big vision of taking over the world and I have to say it was more confined than that. It was more like, we can sell a lot of these. We can create really good residual income. Let's get going.
Yeah, it's funny. Any business, I've talked to a lot of business owners on this podcast, and there's a bunch of industries where I don't think people understand the inner workings of what happens behind the scenes. And then you realize how money is made in that industry, and in payments where you're talking about realizing that there's recurring revenue, like that whole, light goes off and you're like, whoa, that is amazing. So it's funny that you tell that story, because I've heard that in different industries, and it's amazing how many different ways you can make money in this country.
Yeah. And like, no one goes to college saying, I want to be a credit card processor when I grow up.
Right.
And there isn't a credit card processing degree. Credit cards has a very low barrier of entry to get in and start making money. Like, you don't have to have an MBA. Hell, you don't even have to have be a college graduate. You just you've got to understand a little bit on how the back end works. You've got to understand what your competitors are doing, because everybody pretty much already takes credit cards. At that time, they did also. There was a lot of technology they didn't already take, accept, and use, because it hadn't even been invented yet per se. But you've got to be able to compare what you're doing to what their current processor's doing, and provide good service on the back end and say, I'm going to be here with any questions. So you don't necessarily need a degree for that. Just some basic blocking and tackling, and then you can jump into the industry. So I think it's been really fruitful for a lot of people But I think if you took like the top, 100 people in payments and however you would rank that, none of them got credit card degrees, and you'd be surprised at their backgrounds prior.
Yeah. Well, listen, I've known you as a modest guy, but I want to tell the at least the audience we have and maybe the world just kind of how you've done it. So you grew Payscape from that, let's call it $2,000 investment to $100 million company, and you didn't take outside capital. What were some of the scrappiest moves that you made to really grow sustainably?
Um, so we started in a basement. That's one. We were like, we don't need any money, and we were at the time we could afford. Where one of us was married. We could afford to. We had a few bucks in our pocket, so we could afford to pay our bills for like a year, basically. And we just started pounding the pavement as we got going. We were selling, a lot. Each one of us could sell 10 deals a month.
Yeah.
And then it's, after 6, 8 months, you're generating some revenue. And we were like, wait a minute, we could probably hire people to do this, and we can scale this out a little bit. How do we do that? All right, well, we need to build a somewhat of a training program, and let's create a little booklet, and now let's start reaching out to people and recruiting them, and that took time to figure out. I mean, I remember the first person we tried to recruit, we took them to lunch. It was amazing. We were telling them, we showed them like, hey, this is how you make money. We're making this much money in 6 months. Think what it'll be in 3 years. And they were sold. And then we were like, all right, come back to the office. We brought them to the basement, and the guy was like, I'm out of here.
Yeah.
um, so we had to get an office, and we did that, and we created a little training program, and we bring people in for 3, 4, 5 days and walk them through everything we had learned, and then fine tune that. And then eventually we hired a recruiter because we were like, this is so much going on just to try and sell and run this little business. So we kind of hired one person to help us, and they would help us recruit and set up their lodging and organize the conference room and all that stuff so that we could walk into the training. Um, and then that was scalable. So once that took us, whatever, 6, 8 months to really figure out and fine tune, then it was scalable from there. We could bring in five to, maybe it was 3 to 10 people per training class. And we were having training classes constantly. At first it was like every quarter, and then it was every 2 months and every month. And once we were able to do that, we grew in Atlanta, because you have rep attrition also. Like reps will go through training and be like, this is halfway through training and be like, this isn't for me. Or they get selling within a month and be like, I'm not happy. I don't like this. We'd be like, we understand. It's not easy. And so we built out Atlanta pretty quick. Call it, we had 15 to 20 of us in Atlanta. And Atlanta's massive, right? So it can handle that many people. And then after people started making money, and then those people, some of those people would started making good money. They would come to us and say, hey, I want to move cities. I want to open my own office. So first the training program, then expanding into other cities. Uh, and we had people say, I'll move to Birmingham, I'll move to Charleston, I'll move to Nashville, I want to do, Tampa, wherever. And we were able to expand, regionally, so that we could get to those cities pretty quickly. And at the time then, I think there were three partners at that time, and and we were just constantly on the road. I mean, you would spend 3, 4 days a week spending the night in these other cities, helping these other offices grow, whatever it took.
Yeah. Yeah.
Um,
That sounds kind of fun. And I think about that scrappiness of those people that came to you and wanted to grow an office. It's almost like you get that entrepreneurial spirit inside of them that helps create that, and which is great. Lead into my next question, which is really about culture building. And as as you built the business, the leadership culture, as you talk about opening these new offices, like I imagine you evolved too, and I'm curious what you learned about yourself as a CEO during this time, and how did you evolve to keep up with the growth of the company? As a CEO from a maturity standpoint.
That's a good question. Um, I would say I was probably a hothead at first. Like, why the hell don't you understand what I'm saying and why can't you do it now? Like, isn't this easy? Like, because I'm just a kid too at that time.
Right.
And then I'd say I probably matured into like, oh, my job is to help train and help educate, and not everyone's equal. And no, they can't see into your brain, you moron. So just continue on your track with training and education. And I think the one of the sharpest things that we did was we built a comp plan, a management plan for managers and their sales reps, so that like as long as the reps were making money, the manager would make money. As long as the manager would make money, the company would make their fair share. So then it just kind of became this culture of like, hey, all we want to do is help you make money. And then when you get on that journey, and it's not like us versus them, like management versus employees or whatever. Once you get your trains on the same track from a comp perspective and a plan perspective that way, it just becomes like a less of a sprint, more of a marathon. Like, hey, we're in this together. It doesn't happen overnight. It's going to take a couple years to build out an office. We get that. So let's do it together. And you kind of get more patience as a leader, and you realize the long-term goal. Um, but, and I would say with all that too, I think part of your question, it's not just you as a leader, it's as an organization, you've got to get, you kind of figure out like, oh, well, if their mission is different than our mission, then it doesn't work. So this mission statement thing is pretty critical. And if their culture is something totally different than your culture, it's kind of okay, but net, like the fundamentals of the culture need to be the same. Like if your culture over there is, a big night out is a movie night and that's what y'all love to do, that's cool. But like as long as the system's in place, we need to make sure we're having fun and we love what we're doing.
Yeah. Yeah, that makes sense.
So yeah, so like if it's a movie night and the other one's like to go do paintball, and the other one office loves to drink and party and the other one loves to whatever, like you got to kind of hone into that and just make sure it's about, hey, the plan is set, the trains are on the track. If we do what we're supposed to do, we're going to make the money. So let's have fun while we're doing it. And that becomes really important. So now you've got, comp, leadership, education training, mission statement, and culture, on the same track. I think then we probably realized that the next most important thing was career growth. Not everyone wants to just stay a sales rep, and not everyone wants to just be a man, whatever, wherever they are in the operations chain, and not everyone wants to just stay a manager. So some people want 3 offices, and they're like, yeah, I did one. Watch this. Now I can do another. How do we do that? So figuring out, career paths for people was really important as well. So that when you started, what we eventually got to is when you would start, we would just document out all the career paths and show them to you.
Yeah.
Like basically while we were recruiting you, we'd be like, cool. So you're going to start here in this position, but look at all these different opportunities in the company and look at where they can grow to.
Yeah,
So
that's very smart, being able to really paint that picture of upward mobility and not just say we offer upward mobility, but actually show that journey. That's really smart.
yeah, and it worked well. And
Yeah.
people were like, cool, well, I want to be in customer service, or I want to be in finance, or I want to, help with the back end, getting accounts lit up and turned on and processing, or whatever it was. We were able to show them how much money you make in those positions. You'd start whatever, let's just call it level 1 in that position. And then by the time it takes you 6 months to a year to get to a level 2. Well, this is how much you make at level 2. And then we would show them all the things, like you need to have done 50 installs. You need to have done, you need to spoken to 400 people in customer service, or you need to have opened your office if you're in management and it needs to be doing, 50 deals a month for 8 months. And then you go to a level 2. And at a level 2, we're going to train you the following things. And we're also going to pay you the following. So they quickly, people in Payscape were like, I am bought in. I love this place. I love the culture. I'm into it, the mission. I know how much money I want to be making in 3 years, and you show me the path to get there.
Yeah.
So like once all those things were in place, it was like a well-oiled machine, and it was scalable.
Love it. Well, let me shift gears, and this is kind of a two-part question for you. So, just so our audience knows, there was a point in time where you made the decision with your partners that Payscape needed to grow, and ultimately, you guys did a merger, and then that was just really what set in motion an even bigger merger that followed. And I'm just curious of how did you decide that this was the right time to do a merger and to grow the company, and then how did that second even larger merger happen out of that?
Yeah, so we had grown the company, I think, as much as our skill set, capability, and everything combined without having capital. We were making good money, really good money. The company was probably doing ballpark $5 million a year of EBITDA. And, we were able to invest back in, and we invested the vast majority of that back in. But in order to really get it to the next level, it needed capital. And we knew that. And so it was probably, it took that we started having that thought 5 years before, we wanted to take on capital, and we were like, well, we're not ready now. If we were to take on capital, we need to be doing A, B, and C. And so we kind of started growing out the company with that as our North Star, and, getting the company ready to bring on whatever it was going to be, a strategic or private equity, whomever it was going to be, and pulling different levers and building out different divisions, and investing in the areas that we thought, the buyers might want. Like, we didn't really talk about tech in that journey of growth, but we had acquired a few small tuck-ins, all tech, so that our sales reps were selling more technology-enabled applications versus just a terminal on the counter. So we were investing more in tech. We were investing more into Salesforce, the platform, and really, the monitoring the data of who was doing what every single day, and what were they creating, and who was having success and who wasn't. That was integral to us getting to that point. And then, Ron, we hired one of your ex-employees, Brady Harris.
Good guy.
He brought a level of professionalism that we didn't have, and scalability, and how to scale this to the next level. He came on board for a couple years prior. That was probably like 2+ years, maybe 3 years before doing the deal. That was part of it. We needed like one more guy to kind of round out our C-suite, and he was amazing, and he helped us do that. And so then it was then we had hired, an investment bank, SunTrust Robinson Humphreys at the time, and and they help, that kind of last year, they're helping you do all the last little things they need. They're building the deck, and then they take it to market. And then, from there, then you're meeting the partners and figuring out who's the best fit. So I think I answered part of your question from there, right?
Yeah, no,
Um,
I think the only follow up I would have to that is, as you knew you were going to do this track, and you ultimately did that big merger with Payroc, right? The big one that kind of set you guys into a whole new level of trajectory. Like, was there any single takeaway in that process as you kind of looked at yourself as a CEO now negotiating these multi-company mergers? Like, Like, was there any like one little tidbit of advice that you could give to somebody who might be facing this? Because you've seen it from both the small side growing into that mid-size and merging, and you have just a really unique perspective there.
Yeah, let me talk about the first part, and then I'll answer the question. The final answer to the question is yeah, the biggest thing I learned was you have to be really humble. Um, so the first piece we did is we merged. We brought on Parthenon Capital out of Boston, who have been excellent partners even to this day. And they were just fintech gurus. They had done a bunch of fintech deals, and we knew we wanted to be a platform. So we did not want to be a tuck-in. We wanted to use Payscape as a platform to do the roll-ups and to buy other companies. So our first deal was with NextGen out of Montana, and we were close to the same size. Their CEO and I had hit it off. Parthenon, we all got together and we merged those two companies, and that was the kind of the beginning of it all. I was CEO at the time, and Parthenon was on a fast track. They're like, let's get going. We immediately had an opportunity on to carve out a piece from First Data at the time, a Canadian back-end platform. So I'm flying back and forth to Canada, meeting everybody. We put that deal to bed. We closed that deal quickly, and then the private equity firm says, "Hey, we got a deal out of Chicago that we just found out that they want to do a deal too. We don't know if this is going to be a fit, but quote unquote, the proverbial dog is going to catch the car." Like Payroc at that time would have been 50% larger than the combined entity I'd already put together with these three companies. And so there's a lot of complexity to that. So I go back and forth to Chicago. Now I'm meeting everybody, and this is where the humble piece comes in. The CEO of that company was like this just awesome guy, probably 60, 61 or 2 at the time, and like a 40-year industry veteran, been a C-level suite at all these major, payments companies. And he was like, Adam, for us to do a deal, I'm the CEO. Like that's the deal we're looking for. And so, I really had to get to know him and quickly and just humble myself and say, you're the guy, and say, I love it. I trust you to take this and take it to the next level and turn it into the platform that I know it can be. And I became president at that time. And he took over and became CEO. And to this day, I'm grateful. He
Yeah.
is, I can't imagine there's a better CEO out there. He is unbelievable. Jim Oberman, is his name. And it's just been a great journey to where we are now.
Yeah, that's
So
awesome. Well, it's like foreshadowing here. You almost know what I'm going to ask you, but you talk about that humbleness of transitioning out from CEO to president, and that's, I think, great advice for our audience. But as you look even further, you stayed on for a good chunk of time, but you
3
eventually,
years,
how many years?
3.
Yeah,
I
I
was
mean,
president and chief strategy officer, um, for 3 years.
yeah. Like that's a lot. And you guys, I mean, the growth was just out of this world, at that time where you were, kind of helping to map out that strategy. But at some point, you made the decision that maybe it's time to step out of the day to day and kind of move on to something. And this is a company you built, you put together, you brought that merger. Like, how did you make that decision to do that?
So I think the question becomes like, for an entrepreneur, like, do you want to be, what do you want more? Do you want to own a part of this platform that's going to go to the next level? Because I had rolled some equity, or are you just the type of guy that's like, I am the CEO and I have to be the CEO? And for me, like, no matter what, I wanted this to go, but I wanted my equity and I wanted my equity in the company, therefore the company, to go to the next level. So after, in that 3-year journey, we had battled through COVID. We dealt with that because I did my deal in May of 19. COVID was March of 20. We had just basically put everything together before COVID with Payroc as the Jim Oberman and the CEO, that deal. So we battled through COVID together. We come out of that okay. And we had done a handful of acquisitions. I can't remember exactly how many we did in that 3 years. If I had to guess, it's probably on the 10, maybe a dozen different acquisitions. We were stacked with all sorts of great founders and leadership, and we had even brought in some other leaders, and we're hiring like excellent people. You don't have, at that point, you're not like, when you're growing, you've got like scared money and you're like, oh, I can't afford that, guy in finance or ops or whatever. Like, let's negotiate hard with them, and we got to steal somebody because we can't afford the best, blah, blah, blah. When you get to that size, you're just getting the best. You're like, we can afford it. We want it. We know you're the best in the industry. Let's bring you on board. So you kind of come to a point where you're like, I have done probably everything that if you've got your top skill sets, rank them 1 through 5, whatever they are. I've probably done everything that my top 1, 2, and 3 skill sets have done can do for this company. Actually, when I decided to just go to the board full time, they asked me to be the chief marketing officer. And the woman who was running marketing for me, I was already running marketing. The woman who was running marketing for me, she was better at marketing than I was. I can add a lot of value strategically and leadership wise at that point. But from a marketing perspective, I said, guys, you don't need to pay me another X amount of dollars to oversee her. Just, she's your girl.
Yeah.
So, like, let's be smart about our dollars. And you don't need me to do that. She's got this company covered. And I just kind of felt it was time for me to let them run with it the way they wanted to run with it and to do what they wanted to do. And to build it out the way they wanted to build it out. And it's worked out. They've done an amazing job. I mean, Payroc today is now I don't know how you rank them. You take out, the top bank payment processors, a couple of them. Then there's a couple more super tankers from FIS and Fiserv, and of course you've got like Stripe and Adyen, and then we're in the next crew. We're in that next, we're somewhere in between, I don't know, 7 to 10 largest processors in the country now. Like when we did, Payscape was probably doing, well, was it $4 or $5 billion of payment processing volume when we did the first deal, and now we're doing close to $100 billion.
Wow.
Of payment volume. So knock on wood, the plan has worked out really well, and the team has done an incredible job with it.
Yeah, that's awesome. Well, as we think about this transition, so I don't want to spend a ton of time on this, but I think it's really interesting. So I know you are a true entrepreneur, and as you look to kind of the next thing, I know that you've got this new business called Fish Tips, which I want to hear a little bit about. But as you think about moving into starting small again, and kind of building something from the ground up, really I want to start with like the whole point of the show is called Projecting Grandeur, which is about projecting out what you are building before the world knows kind of what's happening behind the curtain, if you will. Like, what excites you about this business, and how do you think that ties into the concept of projecting grandeur?
So I think at the core of it, I'm a serial entrepreneur. I didn't know I was until I kind of looked back on my career, and I was like, wait a minute, I had a startup in high school. I created this before mobile car washing was a thing. I would go to people's houses and say, hey, for $50, I'll come to your house and click wash your car. And then I hired my buddy to do it. And then in college, I started screen printing t-shirts, and then I started a little business out of that when you go to the fraternities and sororities and the bars, and then built a business out of that in college. And then out of college, I started a kind of an independent contracting sales firm in the apparel industry, and I would go to all these different apparel companies and uh, rep their brand, and then take them out on the road. And I would spend 3 weeks on the road selling to all the mom and pops across the South. So, and then I did a couple after that. I had a couple other non-related businesses to payments. So in hindsight, I really enjoy building something from nothing. Like I love that challenge. The size is, a lot of the fun stuff to me, which is now just very fundamental. Like, how do you build the back office? How do you get people to sell something? What should their cadence be? And now, since this journey I've been on through in payments, I've learned a ton about tech. So, how are we going to build out the tech? Who's the team that's going to build it out? What are the players you need in order to build out the tech? How do you begin that process? How do you wireframe, then architect, and blueprint, and then which engineers do you need? So I've kind of learned a little bit about that too. And I really do like building something from nothing. And I like the holy cow, no one's doing this yet. I love that. Um, and so that's kind of what we're talking about a little bit here with fish tips. I love to fish. I've always taken out guides. And one thing that we all do when we take out guides is you keep their number, and then you hit them up like whenever you're going back to that body of water again, and you're like, hey, what are the fish biting on? And the guides are always rolling their eyes, and they're like, man, just book me. This is how I make my money. And you're like, oh, I can't today, or whatever happened. I'm just going out by myself, and just give me the info. Like, give me a digitally guided trip. Tell me what you would do,
Right.
and I'll pay you. Like, here's $200. Just tell me what to do. And then they'd be like, oh, okay, now I'll give you the juice, as we call it. And so I'm like, why isn't this a platform? Like, I know you guys get hit up all day, and we do these focus groups with, 10, 15 guides, and they'd all say the same thing. Like, I get hit up 5 times a day on this. And so that was the genesis for the idea. Like, why isn't anyone doing it? I love the startup world. I love that size. And so I finally found that I needed an industry expert, found him, excellent guy, fished on college tours, fished professionally, owned a guiding service, owned a bass fishing store, and he's an entrepreneur, and he was kind of looking for his next thing. So we partnered up, and then quickly realized, like, all right, now I need like a CTO techie. Like, I know enough to be dangerous, but I'm no CTO. And found him, partnered up with him, started a company, and then built out the software, and we rolled out MVP in like 3 months.
Wow.
And it was, it's been very disruptive along the way. The industry was like, what? How dare you? It was like Uber to taxi cab drivers.
Yeah.
Now, the size of the sphere is much smaller, but nonetheless, it was very disruptive, and it's just been a fun journey to watch the company progress over. It's been 2.5, maybe 3 years now since that first industry expert guide, and it's trucking along and gaining traction, and we're kind of changing the world day by day. It's a smaller world, it's a smaller space, it's a smaller company right now, but it's fun, and we're making a difference in the space right now too.
Yeah, that's cool. Well, last question, Adam, and I really appreciate your time today because I know you're busy. But as you look back and you kind of let's say you and I are sitting at a golf course and you're retired and having a beer and hanging out. Like, what would you want the world to remember about your body of work, from Payscape to Payroc and Fish Tips, and who knows what comes next? Like what do you hope to leave as your signature?
Wow, these are heavy, Ron. Um, I think the thing that's most important to me are the people that I worked with, and that I was able to build out platforms that like made their careers and made them money, and they had fun doing it, and they were able to provide for their families, and they were able to, whenever I see them now, I get big hugs, and it's like, hey, thank you for everything. Like, that's probably the biggest moment,
Yeah.
for me. That's probably the most special. And then, not even in second place, in equal position to that, are all the people, investors and partners now, right? That's transformed. Investors and partners say the same thing. They're like, man, you've been everything you said you were. Uh, we've loved working with you. We've made the amount of money we thought we were going to make, hopefully more. Um, and that the people you partner with along the way have that same feeling towards you and about you. And then I guess now that we're talking about it, I think the third piece that's equally as important to this is the customers that have used our technology along the way, and our customers that we've processed their payments and used our technology, and they said, man, your tech has been amazing. Your company did everything you said it would, and your tech, allowed me to move faster and be a better, be a better company ourselves. So I'd say those three pieces would be a great memory.
Yeah, I love that. Well, listen, Adam, your journey from, scrappy founder with a couple grand in the bank to, really a merger architect and the modest disposition of just how you carry yourself. I think you're really, the things you shared are the core of what Projecting Grandeur is all about. It's about aligning ambition, authenticity, and you're just a good dude. And I just want to thank you for being part of the show today and sharing your insights with our audience. I know they'll get great value from it. And I'll share all your socials and different things with the release. But if people want to get a hold of you, is there a simple, easy way for people to reach out to you?
Yeah, Adam Bloomston at gmail.com.
There we
It's the
go.
easiest way.
Well, listen, it's great to catch up. And again, you're an inspiration. Appreciate all you've done for for at least our little community here. And thanks again.
Yeah, thank you, Ron.